From the morning reading, OPEC production cut coming in November. That's the question. Market acts so. Energy stocks lead the SPX rise. 8 of 10 sectors moved higher on Wednesday. XLE, XLB, and XLI were the strongest sectors, while XLV was the weakest sector. Oil futures fell $2.23 to close at $47.16 as OPEC reaches deal to limit production in November. Breadth strengthened compared to the prior session as advancers led 2308 to 753 on the New York Stock Exchange and led 1652 to 1156 on the Nasdaq. SPY, the Qs, and IWM bounced higher as reports of an OPEC production cut deal beginning in November circulated. IWM gave a bull flag entry signal. The spiders and diamonds continued their bounce that began on Tuesday and are rising to short-term horizontal support. On the S&P 500 snapshot, the afternoon rally was on oil. Forget the Fed, no rate hike worries, and Clinton versus Trump, it's on the back burner until the next debate. Today's market started the session in muted indecision. Durable goods were weak, but not unexpectedly so, and after all, the U.S. is a post-industrial nation decreasingly reliant on durable goods production. But news of an OPEC deal triggered a quick money rally. The S&P 500 bottomed at its negative 0.38% intraday low in the late morning, rose back to flatline around 2 p.m., at which point the oil news triggered a spurt higher. The index closed the session with a 0.53% gain, a bit off its 0.58% intraday high shortly before the final bell. The OPEC news was an especially big deal for the energy sector. West Texas Intermediate crudes closed the session up a whopping 5.33%. The yield on the 10-year note closed at 1.57%, up 1 basis point from the previous close. In other morning reading, tech stocks are about to have their best quarter in the past 10 quarters. Unless they sell off fairly hard in the next 2 days, tech stocks will help power the Nasdaq Composite Index to a new all-time high with the best quarterly gain since December of 2013. Last time it reached a record with the best gain in 10 quarters was in 1999. But previous instances were not a consistent signal that a big quarterly gain was a blow-off move. Despite good gains, investors continue to pull money from funds. Combined outflows from equity, mutual, and exchange-traded funds have rivaled some of the worst over the past 20 years when summed up over the past quarter. The next couple days have been seasonally weak. This is more trivia than anything, but the S&P fund SPY has rallied during the last 2 sessions of September on only 9 out of the last 23 years, averaging a return of negative 0.4%. The Nasdaq 100 fund, the Qs, has rallied 6 out of 17 years, averaging a negative 0.6%. That's a very slight headwind for the short term, especially as the short-term optimism has been extreme. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:12 a.m. Mountain Time, and I'm recording this in preparation for the market day of September the 29th, 2016. Remember that on YouTube, you can have a free subscription to the channel and be alerted to new content being published. Give the video a few minutes after being published for the video to be available in high definition. Click on the setting button to choose the high definition playback level. In this same area, you can also control the speed of the playback. I routinely find that I can fully understand videos that I listen to at about 1.5 times the recorded speed. Frankly, you can listen faster than I can speak. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into the morning report. And that one. And at the time of this cut, all 4 of the broad market U.S. indices were down just below scratch and nothing of significance was happening. Crude oil was down also just below scratch. Euro up just above scratch. Bonds down about 1/3%, the only thing that was moving in this group that we follow. And gold was up just above scratch. In overseas action, a bit more movement. China up about 1/3, Hong Kong up about 0.5%, Japan up about 1.4%, Germany up just under 1%, and the United Kingdom up just over 1%. In terms of macroeconomic reports for today in the U.S., you have final GDP on the quarter-over-quarter, and you had the weekly unemployment claims. Also, you have FOMC member Powell speaking and pending home sales after the market opens. Natural gas storage follows that, followed by Fed Chair Yellen speaking after the market closes. Did not show Friday. Since there were so many reports on Thursday, we ran out of space. In terms of current volatility conditions, things have been ebbing off here after the last couple sessions. Short-term VIX down to an 11.72. The skew has risen just a little bit and just gone into the warning category at a 126.85, but certainly not as high as we normally get excited about. On the IV percentiles, SPX also has dropped a little bit. It's at 18. The RUT at a 8, the Nasdaq at a 16, and the Dow at an 18. We did have a standard deviation move put in yesterday on one market, and that was the small cap Russell. We did have a +1 standard deviation move. Things are starting to quiet down a little bit after a lot of volatility have been passing through day after day. We certainly have plenty of color here, but it's not quite as dramatic, especially on the S&P, as it was just a couple, 3 trading sessions ago. In terms of the charts, let's go ahead and go there. And give me just a second, turn this back to white like everybody likes it. And let's go to the Smp Futures. And you see yesterday's action was pretty positive. In fact, you had a Pearson's arrow come in. But bottom line, we're just still within the range. The more interesting thing perhaps at this point is that we've had this higher high. And now we're looking to see, can we get a, I should say, higher low. So we had the swing level at a higher low compared to the prior lows. And we also are now looking to see if we can break out of the cloud, get a cloud breakout, which would also simultaneously take us above the point of breakdown, start looking at filling that gap, and as well as break out above this previous high and give us a higher high. So some very important technical levels coming into play here. Does this area act as a resistance area and keep us honed in to this small range, or do we start to establish something a bit more bullish? Short term, we certainly are bullish with this higher low, but until we actually get that paired with a higher high, and continue this more recent pattern, we're still kind of mostly reading this as neutral. Now, in some of the other markets, it's not quite that so. Now, quickly to the Dow. Dow very much has been mirroring the S&P of late. So also looking to see, can we get something that is higher than this swing high and the point of the breakdown and start to fill this gap. It has a little further to go to break out of the cloud and then come back here into the previous horizontal area of resistance that bumped along this previous high. But that's not the case with the Nasdaq. The Nasdaq has been definitely the most bullish of the 4 indices that we follow. And you see here a recent high, a bit of a pullback, but a very short pullback, which was engulfed and then broken out from. So we've had a bull flag breakout on the Nasdaq, and really the expectation is that you'd come back into these former highs and should break those highs if everything follows through. And then on the Russell, of course, had a good move yesterday as well. And Russell also has been one with a higher low. So short-term action is pretty bullish. We've had a bull flag breakout on the Russell, but we need to also take out these former highs, and here we have basically a double top type of area. So a bit of overhead resistance here. We'll need to see that the Russell and the Nasdaq can break through these areas and lead the overall market higher. In terms of other markets, we of course talked an awful lot about crude oil yesterday, and you see the action yesterday. Big bullish candle. But guess what? Where did it go to? It just went up to the area of the former resistance. So we'll look to see, can they turn that around today and take out this swing high and start to make a run back at retracing this prior move. We had this big nice move here, but then that went into a complex consolidation pattern. But it's starting to show signs of life, of perhaps coming back up here and heading towards this 49.43 area. And certainly if you're in a short-term swing trade, you would probably want to exit in front of that area with the bulk of your position and see if with the remainder perhaps you could not get through that and run on. In terms of gold, gold has been also pretty interesting of late in that we've had this ascending triangle start to form, but it is in the short term in consolidation and frankly in the cloud. Very neutral pattern there. And let's take a look at bonds. Bonds, of course, with the action on gold yesterday, saw a bit of a reversal, so gave up some space yesterday. And we'll take finally a look at the volatility. Volatility has been dropping, and at this point right now we're below a 13 and have been in yesterday's session. We almost went below 12, so things have definitely been coming down on volatility. And I think that's probably enough on the charts for right now. Let's go ahead and go to the daily report. First of all, on our market timing, we have our 3 different signals and no significant changes from yesterday on the first 2. IBD is the source of our first signal. It's in a confirmed uptrend. That's bullish. Our second signal comes from the GMI index, and that is a 5 out of 6 with the buy signal that's been in place since September 22nd. GMI 2 is a 7 out of 8, so that's supportive. The stock charts decision point scoreboard continues to slowly but surely improve. You see 2 new short-term bullish signals coming in from the S&P yesterday. So short-term, S&P mixed, Nasdaq bullish, Dow neutral to bearish. So really quite mixed across these different 4. And the intermediate term, a bit more strongly bullish, and you see the S&P and the Nasdaq all in an intermediate term bullish postures there, but the Dow again that neutral to bearish, and then all of them have this kind of mixed signals on the long term. So we continue to be in a consensus here of bullish, while at the same time recognizing that we have an expectation of really choppy type markets and certainly not clean trending markets when you get this mix of signals. We like to look for what we call the stack, and that is to have the short, intermediate, and long term all line up with no contrary signs. That is where you tend to get really nice trending markets with a series of higher highs and higher lows, and you see those swing trades that you put on, actually following through and hitting targets and so forth. That is not the market that we are currently in at this point based on these indicators. Position sizing opinions, no change from yesterday, 100% on both models. Intermediate term market postures continue to improve. We now have strong bull on the S&P and the Dow, and severely strong bulls on the Nasdaq and Russell. So things are definitely looking better on that set of indicators. Remember, this is anchored on the intermediate term time frame, which is the primary time frame in which I trade on. The whole structure is based also on support from a bullish sentiment line, so that is helpful. Hedge warning status remains 0 plus normal with some cautionary aspects. You also have, in our 3 special opinions, no change from yesterday. VIX is inside the acceptable window to initiate new positions. Do keep in mind, though, we're near the lower threshold. If it drops below a 12, novice traders may find that they want to start reducing position size. The reason for that is that the premium that you're getting when volatility is that low compared to the amount of risk that you're taking on is somewhat troublesome. In terms of the other 2 strategies, covered calls and put selling, both acceptable for the initiation of new positions for novice traders is the opinion. Consider a pretty conservative setup, though. 2-to-1 ratio of in the money, out of the money, and a 2-to-1 ratio of low beta and high beta. And then also on put selling or in covered calls, consider legging in to those more aggressive setups, and also keeping those position size in the scale you are willing to own. We always say that, but that's even more important to follow when you are in these more defensive stances like we are right now. Now, in terms of volatility-based warnings, really the only thing that stands out is this high number of distribution day count on the S&P. Trend-based also all very nicely in bullish camp, though the key intermarket risk aversion indicators continues to be relatively weak, with 4 of these as risk off and 1 as neutral. These are actually probably have a little bit more separation than they did yesterday's video. So this is a bit of a concern, and we many times will see this as our more sensitive indicators, so that is concerning. In terms of sentiment, short-term stocks somewhat elevated at a 7 out of 10. And you see the fear and greed index actually did tick up a little bit yesterday, but still, overall, put this in context, it's neutral. In terms of sector specific, you can see where the different sectors' breadth came in, and certainly energy was a huge winner yesterday with almost universal positive days by all its individual components. Materials, industrials also doing well. But on the flip side, of course, telecoms only got 5, but 2 of those 5 and the 2 big ones were negative. Utilities, more importantly, in terms of a breadth standpoint, was more universally low, and then healthcare and consumer staples. So bottom line, these are the more defensive areas of the market. So this has been something of a trend in recent sessions. So we'll continue to watch that, but it seems to be more of a rotation out of low beta and into higher beta, which is contrary to our current covered call opinions, where we have going into more low beta than high beta. So we're going to continue to watch this and see if we actually get some follow through and some consistency on that. In terms of percent change, you see energy, again, the giant winner, 4.34% in that energy sector yesterday. Telecom on the flip side, those 2 big companies dragging it down to a negative 1%. In terms of the market postures across the 3 time frames, quite a bit of healing here compared to, say, Tuesday. And you notice retail and utilities, financials, healthcare, and consumer staples, again, primarily coming from those more defensive areas, are for the most part the ones with the intermediate, short, and perhaps even long-term market postures being weaker than other sectors. That should be enough for today. We're coming right into 20 minutes, and that's about where I like to wrap this thing up. Let's go ahead and I will say one thing right here about the YouTube. I talked about this at the beginning, and just in case you don't know where that is, when you go to this hyperlink right here, that will take you to the YouTube channel, the Falcon Global YouTube channel. Once on that channel, you can certainly hit this button here. It says subscribe, And we're up over, like 240 subscribers at this point. That just basically means that they get an announcement, an alert when content has been posted. It doesn't cost anything to be a part of this YouTube channel. The other thing is, look for that little button there. Make sure it says HD, that's high def. You'll get better resolution of the charts and so forth, so make sure you're getting playback in that high def. You might want to wait a couple minutes after you've been notified that content's available to let it finish processing at that highest quality level. And then the other thing is that you can play that video back at 1.5x. You generally can understand what I'm saying. Turn a 20-minute video into about 13 minutes worth of playback. Obviously, if you find something particularly interesting, you can slow it down, you can pause, you can stop, you can reverse. There's a number of controls there to be able to grab the content, get the comprehension that you're looking for, while at the same time being time efficient with your mornings. So enough for today. Let's go ahead and wrap this up. We'll go to the disclaimers. Hit the pause button if you need more time to review the disclaimers. Also note the disclosures here at the end. The full set of disclosures can be found at this hyperlink. In the meantime, let's see here. We'll go ahead and wrap up for today. Thank you, everybody from Falcon Global. Manage that risk and everything else will fall into place. Good trading to you.